price of that. What for the market to me to make an all-time high. So that has to be S&P 500.2%. And that's that story is worldwide. We get them great. Yahara has more. Hey, Yahara.
Hi, John. We are seeing both Chevron and Exxon shares rising in the pre-market.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance: flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television. Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. This is Bloomberg.
We're seeing companies really basically stepping back and saying, how do I think about my supply chain? We're seeing a lot of the companies move from just in time to thinking about production resiliency. That by definition means you're going to run a far more expensive and a far more diversified supply chain and a far more resilient supply chain.
That was Shamik Alik of Citi weighing in on the situation in the Middle East and the shift we've seen for global businesses to just in time, to something very, very different and slightly more costly.
Just in time to just in case, which is costs more money and needs a different type of technology. You can't send your money over and wait 3 days for them to receive it if you're dealing with rapid fire supply chains that are shifting in real time.
Equity futures this morning shifting in real time, positive by 0.2% on the S&P 500, following the biggest monthly gain going back to 2020 on the S&P 500. On the Nasdaq 100, you've got to go back to 2002 for a gain as big or bigger than the 16% gain we got on the Nasdaq 100 just last month. This morning, down 0.1%. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Apple really blowing it out of the water as the last tech name to report. Shares are up 3.5% in the pre-market, but Apple making it clear that its results would have been even stronger if it weren't for those supply constraints around memory. But Bloomberg Intelligence points out that may be the reason it's making strides in China, since its competitors have had to raise prices due to those higher memory costs. And for that same reason, it is surprising to see these names down in the pre-market. SanDisk and Western Digital both falling, even after delivering a beat and a raise, but the bar was just too high, with SanDisk up 300% year to date, Western Digital up 130%. And we end on shares of Estee Lauder soaring at 11.5% in the pre-market after the beauty giant raised its profit outlook, helped in part by job cuts, announcing another 3,000 today, bringing the total to up to 10,000. John.
All right, thank you. Thanks for this morning. President Donald Trump hosting the Artemis 2 astronauts at the White House this week, the visit coming nearly a month after their historic trip around the moon. I'm really pleased to say that in the studio here in New York City, the NASA administrator, Jared Isaacman. Jared, good morning. Good to see you.
Good morning. It's great to be here.
The pictures are amazing. I understand it costs a lot of money.
industry should be playing with. They don't need to mess around with highly enriched uranium launch, reactors over Earth. That's something that NASA is capable of doing. So we recalibrate again back to the near impossible. The capabilities allow us to explore the outer solar system.
I think about the space race down back in the 50s and 60s and how much that put grants in all sorts of academic centers to try to get up new scientists, to get them into exactly that kind of thing. Is this kind of what we're replicating here?
Well, I'd like to think, and I just told this to Congress this past week, is every dollar you give us, inherent in it is inspiration. So, of course, the rockets, the astronauts walking on the moon, the X-planes, the images that come back from James Webb Space Telescope or our rovers on Mars. But that's not enough, right? That's enough to spark the interest, more kids dressing up as astronauts for Halloween. But we still have a huge grant portfolio that goes out to university. We have a top internship program right now. We take the top 1% of internship applications. And what I like about our moon-based program right now, we're going to have landers on the moon on a near monthly cadence starting in early 2027. We could raid the pantry at every NASA Center for Science Instruments. There won't be enough. So what does that mean? There's kids in universities right now in the United States and across the world that are working on hardware that's going to be on the moon in the years ahead.
There's an argument, why focus on space when we have a lot of problems here on Earth to fix? Can you give us a sense of some of the scientific progress that's coming from some of these programs that has real world application beyond just necessarily hyperscalers on the moon?
Sure. Well, I mean, first, we've been hearing, this since the 1960s too. And what I would say, it's a different budgetary environment now versus then. So 1960s, NASA was about 4.5% of discretionary budget. We're about a quarter of a percentage now. So I would argue we can do both. We can make investments into a brighter future for the world we want our children to grow up in, and try and address some of the hardships, the affordability challenges of the world we live in today. And does it matter? For sure. Inspiration is the price worth paying for the next generation to take us even farther. Scientific, economic potential. I mean, we go to the moon. What could a lunar economy look like someday? I mean, whether we are 3D printing satellites like you described, or maybe we're mining helium-3 that have quantum implications. I want us 3D printing organs. I want us making cancer curing drugs in microgravity. I want all that to come to fruition. We can't force it into existence at NASA, but we can do all we can to ignite it.
When Jared walked into the studio, one of my first questions to him was, you've made lots of money. You've had this great successful life in private business. Why do you want to go into government? I've never heard someone so excited in their job in government.
He feels like he can make a difference. I don't know. It's very exciting here. I wish I could hear you talk for the rest of the hour, frankly, because to me, this is really the exciting stuff where we can actually innovate and find new places. Do we want to find aliens, though? Do we actually want to find other life? I don't think so.
Personally, I don't.
Why would they be?
No. This is the heart of what we do at NASA, is to answer the question: are we alone?
Are we?
I don't know how across 2 trillion galaxies that we are not. When
earlier this year. Already built the technology, already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into an electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Well, mentor Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Not, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up to the minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
All right, we are hovering around all-time highs for stocks on this Friday. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Apple caps off a massive week for earnings, delivering a surprisingly strong outlook.
At the same time, oil waivers on a report that Iran replied to U.S. amendments on a potential peace agreement.
And Jane Street's pay pool more than doubled, topping its biggest Wall Street rival. We're swimming in cash, but we need it because gas is $4.40 a gallon on average.
Yeah, correct. But people are spending. Earnings are great. People are still buying Apple products, even though it's more expensive for Apple to make those products. That's what I'm looking at the pre-market, Matt. I have Apple
million active weekly ChatGPT users. Sarah Fry did not address that metric specifically in the interview with Bloomberg News, but she said they're running ahead of their highest expectations, right? Codex, the coding agent, is now up to 4 million weekly users as an example. But similar story, right? On the supply-demand equation, she's talking about a vertical wall of demand. And OpenAI has been saying for quite a long time, if they had more compute capacity, and the anxiety is about how much they're spending to secure that capacity, they would be able to offer more features and they would see faster growth. So she stuck to her guns on that one in what's an interesting interview with Bloomberg Shireen Ghaffari. I really recommend the audience go and read the full thing on the terminal or on .com.
Yeah, definitely a good read. They want to spend still $600 billion through 2030, and they're looking at annual revenue of like 25. So they've got to fund that. And look forward to your program, considering how much is going on, as it is the case every day in tech, but really especially today. Ed Ludlow co-hosts Bloomberg Tech, that kicks off at 11 a.m. weekdays. Now, let's get to the oil patch. Chevron and Exxon also beat earnings estimates as obviously higher oil and gas prices outweighed production outages from the Iran war. And in fact, they're bringing more online in the Permian. Joining us now to talk about that is Bloomberg oil reporter David Wethy. So David, this has been, okay, the shares are down a little bit today, but they have been up year to date, and really a bright spot, I guess, a strong result from the war in Iran.
Yeah, exactly. The higher oil prices are definitely going to lift both of these companies. Just a matter of fact, it adds to their revenue. A little bit more tricky for Exxon than Chevron because Exxon has more of its output affected by the Strait of Hormuz closure. Right now, Exxon says about 15% of its global oil production is offline because of the Strait closure. Chevron less impacted, but still they have some impact from the Strait closure as well. So look for both companies to try to use their global footprint to maneuver and reposition other barrels from around the world to try to fill some of the gap. Still not a lot though, but I'm going to wait to listen to hear on both calls on how they talk about sort of what the ultimate impacts will be and sort of what this is going to mean for the global market.
Do you think that there might be any politics at play, David? Any of these executives basically calling on the Trump administration to try to move to reopen the Strait of Hormuz? Do they have that sort of ear of the president, just given the concern on affordability and gas prices in this country?
Certainly, we know that they have the line into the Trump administration, and even Chevron has said recently that they speak with the Trump administration almost regularly. So you have to know that they're speaking their mind, that they're getting their point across. Whether they're specifically saying open the Strait of Hormuz or other policy things such as do not ban exports, we don't want to limit supplies. They may be sort of saying it in other ways. They may also, be trying to say that, we need to open up other areas like Venezuela and try to get other oil barrels out through other parts of the world. So they may be sort of doing a mixture of different ways to try to get to the Trump administration.
David, thank you so much for joining us. That is Bloomberg's David Wethy. And later on Bloomberg The Close, Chevron CFO Amir Bonner will be joining the team. Elsewhere in earnings, Ares reported that it's on track to beat its fundraising record for the year as assets under management jumped 18% year over year. Earnings did, though, miss estimates otherwise, but shares are up 2.2%. Bloomberg Finance editor Catherine Chiglinski joins us now. It's been a tough start to the year for Ares, and I just wonder what we make of the fact that they are still able to bring in so much cash despite all of the headlines.
Well, I think that's a really good sign because we have been so concerned about private credit. There's the lingering woes in private equity, which that was a sore spot for Ares in the quarter. But I do think it's a good sign that investors aren't shying away. And I think that'll be key as we head into next week with Milken on board. I think we'll be hearing from a lot of these executives on exactly how is it looking now? Are investors still willing to come into these funds? Are they still willing to put money behind some of these private strategies? And so far, it looks like from Ares, yes.
Speaking of pulling in cash, Jane Street pulled in like $40 billion in trading revenue last year. And obviously, they're paying their employees for doing such a great job, right? What, like $10 billion in pay bonus?
Yeah. And it was more than doubled in 2024. You know, I think it's a real sign. Jane Street has risen to the top of Wall Street. I mean, they're outranking their competitors. That pay, if you were to equate it, you know, evenly, which obviously it's not totally divided up evenly. If you were to, that's more than 7 times what Goldman workers get. And I think that's just a shocking reminder of where some of the power, the shifting influence and the shifting power in Wall Street, really.
I love I mean, formerly of Jane Street and unrelated to this, Sam Bankman-Fried's investments have been on fire. Like if that guy weren't in prison and hadn't, you know, built investors out of billions of dollars, he would be a king on Wall.
Yeah, because he has like all like the OpenAI and Anthropic and all that too, right?
Anthropic, yes. And I mean, it's just incredible to watch. Catherine, thanks so much for joining us. Catherine Jaglinski there covers these finance titans for us. Check on what's going on in the markets after we closed at an all-time high. Yesterday, we're looking at gains in futures. So S&P futures up almost 0.3%. NASDAQ futures not doing quite as well, but that index has been on fire as well. You can see the 10-year yield. It floats higher, another 1.5 basis points today, and now we're getting closer to 440 on the 10-year. Incidentally, right where we are on the national average for gas. Brent crude right now under $110, but holding right around there, 109.88. So those prices are still elevated, but it doesn't seem to be affecting earnings expectations or S&P valuations. Let's get a look at some of the single stocks on our radar this morning. Roblox shares are down after implementing safety features that ended up slowing user growth.
Estee Lauder, they're planning to cut up to 3,000 more jobs to help boost its turnaround plans. And thank God they didn't say it was to do some weird AI thing or something like that.
I'm sure there's AI. More Moderna shares more than tripled from a year ago, fueled by deals with governments outside the U.S. You can see Moderna up 3% in the pre-market. Tune in, by the way, to the close at 3 p.m. today to hear from the CEO of that company, Stefan Fonsell.
Coming up on this show, day 60 of the Iran war, a key legal deadline hits with Trump's war powers on the line. That's coming up next right here on Open Interest.
Good morning. This has been Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data. We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
invest
about 60% 8 years ago to just over 1/3 this year. Growers say the reports are based on rushed or unreliable data. The USDA warns the decline will weaken accuracy, fueling even more distrust. Officials are exploring ways to simplify reporting and rebuild confidence as shaky data begins to ripple through global crop markets.
Elsewhere, Matt, Axios reporting that Iran replied to U.S. amendments on the agreement to end the war. Joining us now is Bloomberg Washington correspondent Tyler Kendall. So, Tyler, does this get us closer to talks, to more ceasefire, to peace, to anything?
Well, Danny, perhaps some potential progress here, though we should say at this point we don't have two of the U.S.'s requests through Pakistani mediators. What we do know is that the U.S. was not happy with the plan that Iran had previously put on the table, which would postpone any dialogue about its nuclear program in exchange for perhaps an interim deal where we could see a reopening of the Strait of Hormuz in exchange for the U.S. lifting its naval blockade. But White House officials made it very clear that any agreement needs to include curbs on Iran's nuclear capabilities, and the leverage when it comes to the blockade isn't going anywhere. Yesterday, we heard President Trump call the blockade, quote, incredible. And in the latest sign that the U.S. is doubling down, a senior administration official tells us that the Department of Justice has initiated the forfeiture process for two Iranian-linked oil tankers that were seized by U.S. naval forces the other week. It's not totally clear what this will entail, but it is something to watch because it could signal intent to seize the oil cargoes on board, which would be considered an escalation. Now, that's not the only escalation. There is always the risk for more escalation, as Axios had reported yesterday that President Trump was briefed by senior military commanders about an array of options, including the potential for a short wave of strikes that could maybe help break what has been a deadlock in the discussions. But Matt and Danny, we should say that when he was asked yesterday if he was getting antsy and if he wanted to end the ceasefire, resume those military operations, President Trump said that at this point, nobody really knows where these negotiations stand beyond him and a few key advisors, adding that he has really blamed what has been a lack of progress in the talks on fractured leadership in Iran.
It's interesting that Pete Hegseth would argue, we're not still in a war because of the ceasefire. He is a man who I think prides himself on his knowledge of military tradition, and traditionally a blockade is an act of war, also considered so under international law. Why doesn't the administration want Congress, the representatives of the American people, to be able to weigh in on such an important event, a war in the Middle East that's doubled the price of oil?
Well, Matt, it's a really good point considering we are at that 60-day mark, which under the War Powers Act would mean that the president needs to seek authorization from Congress to continue the hostilities or at least request a 30-day extension to safely withdraw the troops. There is some chatter here in Washington and speculation that maybe the administration is going to ask for that 30-day extension. But as you alluded to, it doesn't seem like they're going to do that anytime soon because Secretary Pete Hegseth is arguing that essentially the 60-day countdown clock has been been stalled or halted amid this ceasefire. Now, Democrats on Capitol Hill would argue that we are still, of course, very much engaged in hostilities, and they want to see some sort of curbs put on this war by members of the U.S. Congress. But just yesterday, we saw what I believe is the 10th measure failed that would do just that. Though we can say that for the first time, we saw Republicans cross party lines and change their vote when it comes to supporting this war. That was Republican Senator Susan Collins. So perhaps we will see some future pressure when it does come to this, because Matt, we can say, at least at this point, that there has been some murmurings from other Republican lawmakers that for now they are, of course, in support of President Trump's military operation. But when it comes to the administration asking for more funding, when we see that supplemental request for the Pentagon, specifically when it comes to the war in Iran, not the separate 1.5 trillion fiscal year budget request, that is where I would expect to see more Republicans speak up that they would like to have Congress have a say in how this war is going to go forward.
Tyler, thank you very much for joining us. That's Tyler Kendall in Washington. Coming up, Anastasia Amoroso says that AI monetization is finally taking shape after companies bet trillions on growth. She's going to join us next. This is Bloomberg Open Interest.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power, billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television. Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
We're back in news today from Wall Street to Washington. Let's start overseas. Record is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, another competitor. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Nice.
Buckle up. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Anastasia Amoroso of Partners Group says one earnings statement this week summed up recent AI momentum in markets. In its earnings release, Amazon CEO Andy Jassy said, quote, 3 years after AWS launched, it had $58 million revenue run rate. In the first 3 years of this AI wave, AWS AI revenue run rate is over $15 billion. That's nearly 260 times larger. I'm pleased to say that Partners Group Private Wealth Chief Investment Strategist Anastasia Amoroso joins us now. And I guess this just kind of fights back against this idea that the proof of AI isn't here, but it is here. But still, companies like Meta sell off after their earnings and some shakiness as to just how much they're spending.
It is here. I think there's some differentiation going on between who is actually really benefiting from artificial intelligence and who is at the forefront of being the beneficiary are those cloud computing companies. Those are selling cloud capacity to the Gen AI companies that are really also seeing monetization as well. So, if you look at those cloud revenues, they first of all are expected to grow by 23% this year. I think we need to upsize that number after the reporting season. But what I find stunning is that fast forward to 2029, and if you look at some of the estimates for cloud revenues from the big four, then it steps up to something like 700 billion from 300 or 400 today. So it is meaningful. So, maybe investors have been waiting for the payoff, but I do think it is going to come over a sequence of years.
I read through your notes, and the big number to me is 1.5 trillion. That's the amount of basically AI backlog that you've calculated from basically the four big hyperscalers. It's a massive amount. Tell us about the number, like how you got to it and what it means.
That's right. Well, the companies themselves reported or stated that, here are the cloud revenues today, but at the same time, there's a number of contracted revenues that are not yet recognized in the current numbers. And that goes back to the point that, investors often ask, well, isn't all of this priced in? And the reality is what's priced in is the next quarter, maybe the next couple of quarters, but typically what's not priced in is the next couple of years. I think that's what the backlog speaks to. And again, that's why we see that 2029 upside.
Is it hard to price in though, just because these are huge numbers we're talking about and there's a lot of uncertainty? I guess how much conviction can you have around these when these things are changing so rapidly?
Yeah, they are changing so rapidly, but maybe that's the whole point is that AI is accelerating, as Amazon CEO put it, at unprecedented potential and pace, I should say. And, let me put some numbers around it. Today, we're about 55% adoption of AI, meaning 55% of US adults use some sort of AI application. And if you compare and contrast that to, let's say, the internet adoption or the personal computer adoption, this time, 3 years into the adoption curve, we're at about 19% adoption for personal computers and about 30% for the internet. So case in point, this is accelerating really, really pretty significantly. And, I think, Danny, to your point is how do we know this is truly going to come through? First of all, we see an increased number of AI tools that are being launched. But the second thing is, if you look at the revenues of some of the Gen AI companies, this year, I believe they're forecasting something like $54 billion in revenues. By 2030, they're forecasting $307 billion in revenues.
Anastasia, we're going to keep you with us. Anastasia Amoroso sticking around. The opening bell next after an all-time record high on stocks yesterday. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the products?
Can you just move your
Yeah.
supply chain out of China and into the US or out of Mexico and out to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been prior to tariffs, prior to
any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are higher after crossing up above and closing over 7,200 on the S&P 500 yesterday. So right now, this market, you can see futures up 0.3% on the S&P, 0.1 on the NASDAQ, is completely undeterred and really not interested in a war that's extending into a third month, crude prices that have doubled, PCE that at the core is 3.2%, so 60% above the Fed's target and climbing. Doesn't matter because we have low jobless claims right now. We have great earnings and we have, as Anastasia Amoroso is saying, $1.5 trillion backlog in terms of AI. The CapEx is blowing everybody away. KKR ringing the bell at the New York Stock Exchange. There's Henry Kravis and the team. George Roberts, his cousin, celebrating 50 years, I guess.
Bay, Scott Nettle, the CEOs, absolute legends.
Yeah, I mean, absolute titans of Wall Street. I mean, these are the barbarians, the gate. So very cool. And then Seaport Therapeutics at the NASDAQ. I was looking at KKR stock, and obviously
this year's been tough.
This year's been tough, not so bad, down 20%, but it's doubled over the last 5 years. So anytime I can get a return like that, I would be happy.
Yeah, and maybe sentiment is starting to change. We'll see. It's the whole private credit thing that's really been weighing on a lot of their shares. They're going to be reporting earnings next week, by the way. In the meantime, we had Apple reporting yesterday after the bell. It's up 4%. It posted double-digit sales growth, a better than expected revenue forecast. All of that despite rising memory costs for hardware. And they have just limited output of their Macs, so they're supply constrained too, but there's plenty of demand, Matt, so those shares still moving higher this morning.
Yeah, really fascinating earnings. We also saw, less, I guess, unexpected, Chevron and Exxon doing very well. They did go past estimates, blew past the estimates because of oil prices, obviously, and production increases that are offsetting the supply concerns out of the Middle East. You can see looks like investors taking profit here in Chevron and Exxon because the oil patch has gained about 25% year to date. Let's bring back Partners Group Private Wealth Chief Investment Strategist, Anastasia Amoroso. And I'm always curious to know, Anastasia, what your view is on higher energy prices. It's helped, obviously, a big sector of the market. Not a hugely weighted sector on the S&P, but it's big for like the FTSE and other indexes. What do you think about higher oil prices?
That's right. I mean, I think higher oil prices for now are manageable. And our base case is, yes, this will impact growth on the margin with some global divergences, but the U.S., for example, should remain resilient and certainly no recession in the cards. The reason I say that, first of all, there's the overall intensity of the economy, which is oil intensity, which is 63% lower than it was in the 70s. I also don't think the Fed is going to respond to the high oil prices with rate hikes, which is a really key differentiator. And then when you look at the consumer, which, yes, you do have 37% higher gasoline prices, but at the same time, energy represents 5 or 6% of the CPI basket. It represents something like 2% of actual household spending. So for all those reasons, and the fact that we do have
by and large, energy independence in the US. I think that's why we can remain
What does the
resilient.
energy independence do for us, considering the price of crude is set globally, right? So it doesn't matter how much West Texas Intermediate we're pulling out of the ground. Everyone who's a consumer of that has to pay the same that people in Asia or people in Europe are paying for West Texas Intermediate.
I would say it does a couple of things. You know, first of all, it prevents physical shortages. You know, if you are in China or if you're in parts of Asia, you might have to think about actual physical shortages. And that's why in China and parts of Europe, we have seen demand restrictions. We have not seen that in the US. So yes, prices are higher, but we don't have physical shortages. You know, the second thing is that there's the oil side of things, but there's the natural gas side of things too. And if you look at natural gas prices, and I haven't looked at it this morning, but nat gas prices a couple of weeks ago were below where they were before the war. So that's what energy independence does for it. You know, make sure that all those things we're trying to fund, whether it's, you know, to power data centers or, you know, prevent physical shortages, that's critical.
One of the things that was flagged to me by Steve Hove, our quant team here at Bloomberg, was this index he put together that's basically unprofitable companies, but their trajectory is one in such that it looks like they will be profitable. They're getting less unprofitable, and it's trading at all-time highs. This is the index right here. This seems like a really bullish contour of the market because it's not just unprofitable tech, but it's the fact, or unprofitable companies, but unprofitable companies that are improving. What is it about this economy, despite the fact that oil prices are higher, that sentiment's really low, that you can have something like this, that unprofitable companies are outperforming and reaching new time?
Yeah, I mean, economy broadly first, and then maybe more specific to the index. You know, the economy broadly, I mentioned the consumer becoming or being resilient, but also you do have a pickup in corporate CapEx. You know, we talked about hyperscaler CapEx, but if you look at CapEx broadly, that's picked up substantially this year. You know, you also have a shifting of capital expenditures from software to hardware. And so all of a sudden you have this manufacturing and industrial engine that's also working for the economy. You know, you also have profitability for large corporations, which is at a record high. You know, first of all, we are outperforming in terms of the earnings season. 88% of companies are beating estimates by something like 10 or 15%. And you have a record profit margin at 13.2%. So it's not representative of the entire economy, but I think it's representative of large drivers of the economy. The index in particular, of course, I'm curious to see what the composition is, but it is also a good sign. And by the way, it's natural, whether it's in private markets or public markets, is you start with an unprofitable company, but if it does have the right secular trajectory and the economic tailwinds, it can move into profitability.
I remember so many people saying that in 1999. I mean, I know this is different, right? But
several examples that have done that.
Constituents of the index, and to be fair, it's completely different things. It's Bloom Energy, it's Micron. I think I saw Wayfair, Warner Brothers is in here, so it feels really diverse in the type of companies. There's a lot of tech. I mean, CrowdStrike's in there, but it seems like a wide breadth of industries that's kind of succeeding in this way.
That's right. But I think it does tell you that something is working in the US economy. And, you know, some of it is cyclical, but some of it is secular. You know, I think what's working in the US economy, we're in actually still the first wave of a three-wave transformation of artificial intelligence. And that's going to produce a lot of beneficiaries, for example, in data centers and the power sector, and even in the software sector as well. You know, then I'm back to kind of, I noticed Bloom Energy was in there, you know, back to the energy conversation. You know, look, a month or two ago, you know, a lot of people would have told you the Strait of Hormuz is never going to shut down, or it's not going to stay shut for more than a week or 2 weeks.
Or
And here we are.
catastrophic if it did.
Right. And here we are. But I think the memory is not going to be short on this one. And I think a lot of investors will think, what do we need to invest in going forward? Which is resilient, likely domestic energy infrastructure that's diversified and that's powered by multiple sources to produce electricity. So,
Not
so
wind, though.
Depending on where you are.
Just kidding.
Depending on where you are.
Anastasia, great having you here.
Very
Thank you so much. You bring us great intel all the time and
Thank you.
fantastic numbers. Anastasia Amoroso there from Partners Group. Let's get a check on the stock market right now. We're looking at gains once again, up 0.5%, right? 72.47, the level on the S&P 500. I'll walk over here and check out the move screen because the breadth is always interesting to look at. It's strong to the upside while, you know, 3 3-2 gainers to losers right now. So that's a good. Apple continues to rise up 3.33% after beating expectations yesterday. And you've got Microsoft and Nvidia on the upside as well before you get out of tech and into drugs. Google on the downside right now, but not by too much, down by about 1%. Amgen is off also about 4.5%. Qualcomm, Western Digital down. Let's take a look at the actually the industrial breakdown of this on the GRR screen right now. And you can see IT is doing well, which is interesting because the NASDAQ not doing quite as well as the S&P 500. The reason for that is communication services down here, and the energy index is down, the biggest loser of the group after beating earnings. We always used to say at Tucker Anthony, buy the rumor, sell the news, and maybe that's what's happening today, Dan.
It also looks like there's a really good day for software. IGV is up more than 3%. Atlassian had earnings, and that has a lot of short interest, so maybe there's a nice little short squeeze going on in software.
And you had a great software conversation yesterday with a guy who owns a lot of software.
Orlando Bravo.
Money to them, yeah.
Yes, the biggest investor of private software companies, and as you'd imagine, is very bullish. Kind of has to be, but he made some good points. Anyway, coming up, Mag 7 earnings show AI demand and spending isn't letting up as it powers the S&P 500 to all-time high. Mandeep Singh of Bloomberg Intelligence joins next. This is Bloomberg Open Interest.
Well, mentor Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily from the magazine that helps global leaders stay ahead.
It's the conversation around your company.
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Very big things.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
Yes, they cash you either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Looking to you from the bomb shelter.
It's White House, still pushing.
And the analysis you need to make informed decisions fast.
Nothing is final until it's well and truly final.
The really important question is whether we'll get second round effects.
Nobody covers geopolitics like Bloomberg.
Let's get you some top calls. Some of the analyst action we're watching this morning. First up, Hershey gets an upgrade at TD Cowen after beating expectations. The chocolate company says that Ozempic users are driving growth in its mint and gum brands, thanks to side effects like dry mouth and bad breath. But there's no way that offsets like lower sales for chocolate because of GLP-1s.
What's
Maybe.
what's the dry mouth is a side effect of GLP-1.
Yes, and bad breath. So they're like more people are buying it.
I got it.
People are
I
perfect.
wonder if it got like because of weed, if that's also. Anyway, Morgan Stanley is out with a big upgrade on Caterpillar as it more than doubles its price target on the company, saying that rising demand from data centers is driving strong growth. Who would have thought? Caterpillar is an AI company, but we actually have been talking about it for a while. Admits that it underestimated construction demand.
And then finally, there's the Apple earnings. Wall Street is weighing in. Baird, Wedbush, and Evercore say that iPhone demand and solid margins show that Apple is handling cost pressures better than expected.
Staying with tech, Danny caught up with Citadel Securities strategist Scott Rubner about recent market volatility, and he had this to say.
So I think when there is a sell-off, right now it's a buying opportunity, especially in the US mega cap tech stocks.
Let's bring in Bloomberg Intelligence senior analyst Anurag Rana. And Anurag, I don't know if you saw that yesterday. We had a fantastic day at the Bloomberg House in Miami. Danny and I beating the drum to the race, but then leaving town before the race started. I don't know how that happened. What's your take on tech stocks, on software stocks on a day when we have, finished a blowout week in earnings for the biggest hyperscalers and Mag 7 companies?
Yeah, I emailed Danny and said, like, you should tell Thomas to go out and buy some companies because that would really help the sector at this point. So obviously on the software side, Atlassian did well, and that's really helping it. But frankly speaking, when you look at the other cloud providers and even Apple, I mean, you can see the big divergence between what they are doing versus what the rest of the economy is doing. When we look at technology companies that are not these 4 or 5 cloud providers, they are seeing pressure on IT spending, whether that's ServiceNow and, going forward, it could be Salesforce and Workday and so forth. But these cloud providers, because of their AI infrastructure play, are seeing a massive boost to both the growth rates, and they're doing a phenomenal job of managing expenses, which is showing up on margins. So it's a great place to be in terms of a secular growth story, which is all these cloud providers.
Yeah, Atlassian earnings, I mean, punishing all the short sellers this morning. Anurag, you mentioned that conversation with Orlando Bravo. You did message me afterwards, so I knew you were listening. So I want to get your take on it. Here's a bit of what he had to say in terms of the strategy of AI versus software, and maybe the lines are getting more blurred. Take a listen.
At the end of the day, many industries are becoming software companies. And now with AI, they're becoming intelligent software companies. And when you invest in these spaces, you kind of move with the industry itself. I think what people are missing is the beauty about software and AI, and they will come together. They will be no difference between either in the next probably couple of years.
So Anurag, one of his big arguments was essentially that for, the big foundational models, they need FDEs, they need engineers who can embed with companies. They're incredibly expensive. They take a lot of time and a lot of effort. And so instead, you have these software companies that act as sort of the AI layer for corporations going forward. Is that a fair argument? Is that maybe the future we're looking at for software?
So the point is well taken, and that has been one of our bigger, reasons for still saying the big enterprise software companies will be fine, assuming they can embed the models themselves. The thing is, they are right now accelerating their AI investments to make sure that their products are also intelligent. If they are not, then it's not going to be easy for them to maintain their market share, let alone, show growth down the road.
The 35,000-foot view, I think, from all these earnings, and especially Apple yesterday, is that there's huge demand, whether it be for AI or the highest tech, highest level products, but they have cost pressures from chips across the industry, and they're supply constrained across the industry. To me, that says prices have to rise. Is that your takeaway too?
So, we think Apple needs to raise prices, but at this point, what they're doing is not raising prices and gaining market share. When was the last time you saw 3 consecutive quarters of double-digit growth? They've already done 2, and they've already guided to the next quarter being double digits. It doesn't happen. They grew so much in China, and I think part of that is because they're not raising prices that some of their competitors are. Now, in the case of cloud providers, they have no choice. I mean, it's the incoming, you could say servers are so large in terms of quantity that they cannot manage it and their costs are going up. Apple's managed it well, but in the case of their new product launches, we think the price increases is going to come at the highest end model. So whether it's the iPhone 18 Pro Max or the foldable, I think that's where we will see some of the price increases.
What about at OpenAI? What about at Claude, so widely used by consumers and now starting to see real enterprise usage? What about for Gemini and Grok? I mean, like the consumer price is $20 a month. Does that have to go up? The enterprise price is like $200. Does that have to go up?
See, luckily for both OpenAI and Anthropic, they are private right now. They don't really need to worry about it. As long as they get funding, it's not an issue. Gemini, it's free. In fact, the free Gemini app right now is phenomenal in our view. They have a massive search business and a cloud business to subsidize it. So I don't think that needs to go up. They need wider adoption right now. They need people to use it more in order to make sure that everybody is comfortable with using AI tools in their daily workflow.
Hey, Anurag, thank you so much for joining us. That's Bloomberg Intelligence Senior Analyst Anurag Rana. Enjoy the rest of your Friday and your weekend. Coming up, Wall Street moves into election betting with the first prediction market ETFs. That's coming up next on ETF Friday. You're launching Bloomberg Open Interest.
Thanks so much.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Trading day is about to start.
You're already looking for that Ed.
The Open Trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom. This is your opening trade.
Only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse of the weekday only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economic, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Let's take a look at the new highs we're reaching in stocks right now. 7250 is the level on the S&P 500, a gain of 0.5% after locking in a new closing high yesterday. The NASDAQ up 0.75%. So now the NASDAQ doing better than the S&P, 27,660, the level there. So it just continues to fly higher as corporate earnings and especially earnings from tech power this market higher. In terms of crude, actually down 1.2%. So that's good news, I guess, for equity indexes, for equities, not for Exxon and Chevron, which are now both trading unch, but NVIDIA is trading unchanged as well. So not a drag. Apple up 5%. offering some upside there. And we see Aries right now down 1.1%, even though they've taken in a huge haul, continue to Moderna off 3% as well. And we're going to hear from the CEO of Moderna, I should point out on the close. Stefan Bonsell is going to come on and be interviewed by Romaine and Katie. So I'm looking forward to that.
As am I. And Matt, it's also Friday, which means it's ETF Friday. And Wall Street is taking election betting mainstream with plans for the first ETFs tied to political outcomes. Joining us now is James Seffert, ETF analyst for Bloomberg Intelligence. James, great to have you in studio. Great to see you.
Thanks for having me.
So some of these are coming next week. How do these vehicles even work? What are they essentially betting on and buying and selling?
So the first ones that are coming to market, one, they're from three issuers. So Round Hills looks like they're going to be the first out, but Bitwise is filed and so is Granite Shares. And they're essentially going to be bets on political outcomes. So are the Democrats or Republicans going to win the House or the Senate or the 2028 presidential election? So, and it's just going to be like prediction markets. Either it's going to go to 100 or it's going to go to functionally zero. And you're going to be able to do that through an ETF rather than going to something like Kalshi or Polymarket or other
it's hard to understand how it works, especially if it goes to zero. I mean, how does that circle get squared?
I'm sure that's what they've been dealing with the SEC for the last few months since they filed it. So if you look in these documents, they're like in all caps, if your market doesn't win, it will go to like you'll lose substantially all of your money. It won't go fully to zero because they're going to keep these ETFs around. So the midterm elections in 2026, if Republicans win, it will go basically to 100, right? And the Democrats will go to theoretically zero on whatever it may be. And what will happen is it will go into treasuries after that election happens. So once one wins, so it'll give you time to get out of the fund and it's going to reset to the next election because if you're putting all this time and money to launch a ticker, build up liquidity, build up branding around a ticker, you don't want to just give it up. So I think what all these are going to do is they're going to stick around and just sit in treasuries for a bit for people to either hold on to it or trade out of it.
There's been a lot of scrutiny on betting markets, on insider trading and weird things have happened. I mean, to be fair, all markets, like it happened in oil markets. But if you're now doing this in an ETF wrapper, does that change the regulatory profile of this? Because ETFs are more regulated than kind of the Wild West of prediction market.
Yeah, I mean, if you look at Kalshi and Polymarket are all figuring out about exactly what insider trading is. There's been some high profile cases of people getting caught insider trading on these markets. The SEC is going to be on top of this, I'm sure. I'm sure this is something that they've been discussing heavily with these issuers, but they're working in partnership with the SEC and CFTC. I mean, on the other regulatory thing, like I don't think we're going to see like sports betting prediction markets come into an ETF, but we're going to see this category grow.
But you don't think?
Why not? Why do we have like election ones and not sports betting?
Because that's not as controversial. I mean, maybe we will. I mean, I can tell you ETF issuers are probably going to try because they will throw spaghetti at the wall and see whatever they can get and they will push the limits.
We get like a weird like 3 times levered inverse like Nick's ETF or something like that.
Yeah, I mean, it could be out there. I mean, obviously you have the CFTC chairman that is very much on the prediction market side of this thing when it comes to states versus betting markets and things like that. But at least for now, all these things that have been filed are tied to financial markets, economics, things along those lines. You can make a very hard argument that like what's happening in these elections is impacting
become a casino.
Yeah,
it is what it is, right? As the president says. James, thanks so much for joining us. James Seffert there of Bloomberg Intelligence. Tune into ETF IQ, by the way, and watch Eric Balchunas, Katie Greifeld, Scarlett Fu take you through the asset class in an hour starting Mondays at noon. Coming up the next hour, Emily Rowland says mid caps are growing attractive. Plus, we'll talk surging fuel prices with the boat maker.
anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now. It's pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Some PMI just released. No change.
From ABC News. I'm Mike Dubosky, $4.40. That's the average price for a gallon of gas right now in the U.S. According to Gas Buddy, that makes today the most
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, pump prices keep rising, but President Trump is defending his strategy in the Middle East. Now, we discuss what it means for inflation and monetary policy with Yari Sten from Goldman Sachs in just a moment. But first, Apple posted a surprisingly strong revenue forecast for the third quarter. The tech giant projecting double-digit sales growth, even as it warns of rising memory chip costs and ongoing supply pressures. Well, during this now is Matt Bloxham, senior analyst at Bloomberg Intelligence. Matt, always good to speak to you, especially on a Friday morning. So what stood out to you in these results and the guidance that they also issued?
Yes, I mean, also that guidance itself is pretty robust, so 14 to 17% year-on-year sales growth for the fourth quarter. The market was looking for about 9%, and that's on the back of a strong quarter they just reported of 17%. So I think what we're seeing is very resilient demand for Apple products, even though the iPhone sales were only in line with expectations. Was a pretty full expectation. So the iPhone remains incredibly popular with the 17e just launched and huge success on the Neo. Obviously, there is this kind of slight cloud on the horizon, rising memory costs, which didn't really hit the March quarter numbers so much, but they did clearly signal that it would become a bigger impact going forward, but probably only going to really impact certain parts of the product line, for example, the Mac Mini, which is being hugely popular for AI
workflows.
So, Matt, I mean, overall, the outlook appears, pretty encouraging for Doug Turnus, the incoming chief executive. What are your expectations in terms of leadership transition or, just leadership in general as the transition approaches?
Yeah, so I mean, he obviously inherits an incredibly strong company, but there are a number of issues that do need his attention, most notably being that AI strategy and the overhaul of the Siri platform, which is, been dragging on. So that's one big thing. They've also got some big product launches coming in September, with most likely the first foldable iPhone, the iPhone Ultra. And then he has to think about, the kind of the longer term view about what is the next form factor for consumer devices as AI takes hold, and how's Apple going to take a leading role in that innovation. I think arguably they've been a little bit kind of a follower rather than a leader in some ways recently.
Matt, thank you so much for the terrific briefing. Matt Bloxham there, and of course we continue watching all tech stocks. Matt is our senior analyst at Bloomberg Intelligence. Now, President Trump said the U.S. blockade of the Iranian ports is, quote, incredible. But the stalemate in the Strait of Hormuz continues to shape global energy markets. Well, let's bring in Bloomberg's Charlie Wells with the latest. Charlie, I mean, this is a problem for prices at the pump.
That's exactly right, Francine. These geopolitical tensions are really hitting that oil market. We can see the price of oil is up some 25% over the past 2 weeks. So that is a significant jump as it continues to hold these gains. And again, this has been a market story. It's turning into a corporate story. And now it really is starting to turn into a consumer story as well. So let's flip and look to see where this pain at the pump is hitting across the United States, because you can see divergence here, right? What we had this week is in California, prices at the pump heading north of $6 a gallon for the first time since 2023. So a big jump there. You see divergence across the country, but you see increases. Now, what's really interesting, if you want to think about the consumer and you want to think about politics, look at the states where we see this strong red, where you see these big jumps. Those are typically blue states. These are states that voted for Kamala Harris in the 2024 election. If you look at some of these blues, some of the kind of weaker jumps in gas prices, these are states that voted for Trump. You might start to think that this might not have such negative implications for the midterms that are coming up in just a few months. But let's flip the board and take a look at some analysis coming from Bloomberg Intelligence, talking about how actually it's these red states, these states that voted for Trump, that get hit hardest on a percentage basis. Because when you look at how household expenditure evens out, you see more spending in these states on gasoline at the pump. So again, a hit in those states of as much as 70% there. So again, serious implications for the consumer and also politics as we head towards these midterms.
Charlie, thanks so much for the terrific briefing. Charlie Wells there with very latest, of course, on these rising oil prices, what it means for voters in the U.S. Now, the Fed, the ECB, and the Bank of England all holding rates over the past few days. Let's get the thoughts of Yari Sten. He's Chief European Economist at Goldman Sachs. Yari, as always, thank you so much for joining us. Okay, so three big central banks, but actually the message was quite different. They're in different cycles, and they're also vulnerable in different ways to higher oil prices.
Yeah, I think that's right. And that was to be expected, of course. The Fed is still more in the camp of seeing whether holding or cutting is appropriate. Yeah. There was obviously quite a debate around whether to keep an easing bias or not, with a large number of dissents. I'd say the ECB on the opposite side of that spectrum, I think signaling pretty clearly that higher rates are coming. So I think a June hike now looks really quite likely. And then the Bank of England, we would say somewhere in between, with some indications that rates might rise, but then also Governor Bailey saying that the options remain open. And so I think a healthy range of communication this week.
Gary, I think we mentioned this before. I mean, does the Bank of England have a problem because actually interest rates are just so much higher than the ECB? And so I understand there are different economies, but at the same time, it just puts naturally, at this moment in time, the BOE at a disadvantage.
Yeah, I think it matters where you start. And we think rates in the UK are still restrictive. Bank rate is at 3.75%. Our estimate would be for the neutral rate of around 3%. So you're coming into this with a restrictive stance. You also have a weakening labor market. The unemployment rate, of course, has gone up. Long-term interest rates have gone up quite a bit. Financial conditions have tightened. And so I do think the hurdle for them to hike further on top of that is higher than, for example, for the ECB, where we think you're going into this with a much more neutral setting for interest rates.
I mean, at some point, I mean, the number of hikes that the market was expecting was, I mean, was it out of control? I mean, at some point, it was like 3 or 4 hikes this year, which would really put the economy on its knees.
I think 3 or 4 hikes would be excessive as an expectation at this point. So our baseline actually is that the bank holds through this. Now, I think that's a close call whether they hold or they do a couple of hikes during the summer, but that doesn't get you to 3 or 4 hikes. So I think that would really require a combination of more intense pressures from the energy markets. Of course, it was possible, but wouldn't be our base case. And then I think also signs of strong pass-through, not just into headline inflation, but also into wage setting, into services inflation. And all of that is possible, but that doesn't seem to us like the most likely outcome because the labor market has weakened. Rates, as I said, are restrictive. And so I think we'll get some inflation pressure and possible they lean against it a little bit, but I don't really think it requires a proper tightening cycle from the Bank of England.
I mean, everybody remembers 2022 and what happened there with a lot of central banks being a little bit late to the game. I mean, this also feels like a different situation because it's a much bigger energy crisis than what happened in 22, which was Russia, Ukraine. Is it right that central banks wait a little bit to see more data before they decide? Like, what would a real policy mistake look like today?
Yeah, I think it's right to wait longer. And the differences you mentioned to 22 are important. Central banks are going into this with a more normal level of interest rates. They don't have to do that sort of catch up that they had to do in 22. Labor markets are not nearly as overheated as they were in 22. If you think about the post-COVID bottlenecks in the labor market, the reopening, I think that's very different. Fiscal policy is not nearly as expansionary as it was in 22. And then I would also say the shock itself, the energy shock is big, but it's not as broad as it was in 22. It's energy, it's not food, and we're not seeing the same type of supply chain disruptions in goods markets, for example. And so I think it's right to go into this and say we want to see a bit more data, and that's really what all of them have said. It's just that we think the ECB is closest to actually pulling the trigger because they're starting neutral, and I think for them to go a bit restrictive here is defensible. At the same time, we don't think that these higher rates will be sustained for very long. Right. So we have the ECB cutting a couple of times, but we actually have them, hiking a couple of times this summer, but we have them cutting back next summer because you are hiking into what is a pretty weak growth environment. So I don't really think it needs the sustained level of restriction that we saw in 22. And that aspect is not priced by financial markets. We're pricing these hikes, but they're not unwound. And I think at some point, I think markets will come to that view.
I mean, is it too alarmist to say that we could be seeing the first, green shoots of stagflation? Because stagflation is the one thing that nobody wants to be dealing with.
I mean, we will certainly see weaker growth, higher inflation. Yeah. I mean, whether you want to call it stagflation or not. I mean, President Lagarde said that's a term for the 70s. But it is certainly what we're seeing in the data, even over the last couple of weeks. The surveys are weakening. We're also seeing, both in Europe and the US, that the Q1 GDP data, so the pre-conflict data, was actually also a bit softer. So we have cut our growth forecast quite significantly, especially in Europe. And at the same time, the inflation indicators are going up. Yeah. I think on the headline inflation side, it's really not a surprise at all. This is pretty mechanical by energy prices. But the key question really is the feed through into core inflation, into supply chains, ultimately into wages. And here we don't have a lot of evidence yet. We think there'll be some pass-through, but a more limited pass-through than in 22. But that will be the key issue for central banks to watch.
Do you worry that actually markets, especially equity markets, are focusing so much on tech and some of the tech valuation and the capex spending that have been above expectations that they're not pricing in correctly a possible downturn in the economy? If you look at all of the geopolitics that we're living through, I mean, there's no real good outcome where there's a permanent ceasefire in the next couple of weeks that would allow these oil prices to go down.
Yeah, it is an interesting comparison and to some extent disconnect that you have all-time high equity prices in the US, and then you have significant concerns around energy supply and still upside risk, we think, on energy prices. And our equity strategists do think that the tail, the sort of left tail on equities at this point is underpriced. You can make a very reasonable argument that these valuations are justified given the AI story, given still pretty solid growth in the US, and then also the fact that some of the valuations have come down. But to us, it's a little bit more about the distribution. And as you said, there isn't clarity in terms of how the energy situation will evolve. And I think until then, we do need to keep a bit of an open mind about the downside here as well.
Yari, just very quickly, I mean, after the communication from the ECB and the BOE yesterday, do you expect a hike in the summer?
So we do expect a hike from the ECB. We expect two in June, September. I think that's been pretty well flagged. Risks around that, I think at this stage go in both directions. If energy prices fall significantly, then they could still hike. If energy prices rise more, if you get more pass-through effects, they could do more than two hikes. So I think that's relatively clear. For the Bank of England, I think it's a little more uncertain. We read the communication yesterday, particularly from Governor Bailey, as really leaving options open at this point. Our base case is that they hold for the reasons we talked about, restrictive rates, weak labor market. But I think that's a pretty close call versus delivering a couple of hikes. And so I think we really need to see for the bank how the energy price pressures evolve, how the inflation indicators evolve, how the labor market evolves. I think it's a little bit up in the air still.
Yeah, and hopefully we'll have a little bit more data from now until then. Yari, thanks so much for your insights. Nice to see you. Chief European Economist at Goldman Sachs. Now, coming up, we'll also discuss the pressure building on both the US and Iran as the war enters its third month. Philip O'Brien from St. Andrews University joins us next, and this is Bloomberg.
Own the thing behind the thing, behind the next big thing. Invest in the backbone of the global economy. Brookfield, own what's next.
Well, President Donald Trump says he's sticking with the naval blockade of Iranian ports amid concerns that the vital Strait of Hormuz will not reopen anytime soon. Let's bring in Bloomberg's managing editor for the Middle East, Onur Axios, reporting that President Trump had been briefed on new plans for possible military action against Iran. And with language hardening on both sides, where do we stand this morning?
Well, the impasse as of this morning continues. On the one hand, we have President Donald Trump, as you said, reiterating his intention to keep the blockade in place. He said that the restrictions are preventing the Islamic Republic from exporting oil, and that's depriving Tehran of much needed revenue. On the other hand, we are seeing no indication from Tehran that they are ready to reopen the Strait of Hormuz, which they think should be preceded by the US lifting its own naval blockade. That basically leaves us where we were pretty much about 3 weeks ago when the ceasefire was first announced. Both sides want the other one to act first. And as the impasse continues, we're seeing signs from Washington that Trump is again considering, or at least looking at, military options, which according to Axios may be aimed at breaking the deadlock with a possible sudden and short but intense wave of attacks on the Islamic Republic.
Owner, OPEC meets on Sunday without the UAE. How much attention will the market pay if there's another symbolic production hike?
Well, when it comes to OPEC and the UAE's recent decision to quit the oil-producing group of countries, it really is hard to see what kind of action from OPEC or from UAE from here on can make an immediate impact. At the end of the day, all we're talking about when it comes to production and UAE's decision is kind of hypothetical at this point. Without the reopening of Hormuz, anything that OPEC member countries are going to say about production remains hypothetical and can only have an impact on oil markets once there is an eventual possible reopening of the waterway from sea.
Honor, thanks so much, as always, our managing editor for the Middle East, Honor Aunt. Now let's bring in Philip O'Brien, professor of strategic studies at the University of St. Andrews. Professor, thank you so much for joining us this morning. There's no clean way out. It seems that both sides are becoming more entrenched. Iran yesterday was saying, or at least, the leader was saying that they absolutely need to not get rid of, some of the nuclear options of enrichment, and the U.S. will continue to blockade. What is the way that we de-escalate this?
Actually, I do wonder if Trump's needs for victory conditions have narrowed a lot, and there is more of a way out, but the Iranians right now don't seem to be wanting to go down that road. But if you listen to the administration closely over the last week, all their victory conditions have gone except one. They want a major nuclear concession by Iran, and that might even not be that much in terms of substance. It could just be a stylistic concession, but they need a nuclear concession. That's all Trump is talking about. That's what Rubio and what Hegseth are talking about. If Iran is willing to give the administration some kind of, it might even, as I said, just be a loose concession on nuclear power, which make it look like Iran won't have a nuclear bomb, it could be settled. So in many ways, it's a bit up to Iran right now what happens, and the Iranian regime, from what it looks like, doesn't want to make that concession, but that's not to say that it won't.
Professor, what I hear from all sides is that actually there is no trust. So I don't understand what would bring Iran actually to negotiate seriously if they don't trust the president not to go back on his words.
Then they would never negotiate. I mean, in some ways, negotiations are happening between two powers. I mean, the Iranian regime has been hit. It right now doesn't seem to want a deal, but we don't actually know its real condition. And if they could get, for a fig leaf concession to Trump, if they could get a breathing space to consolidate power and start getting more income in, they might take. I mean, this is all subjective, but it's just to say that there will have to be a deal at some point. It's whether now there could be a deal before going back to escalation or before waiting many months or weeks for a blockade to hit. I'm not saying this is likely. I'm just saying we are now to the point where there is only really one victory condition left for the United States because they failed in this war. And if Iran is willing to give the Trump administration that victory condition, even as a fig leaf, the Trump administration might take it because they want out of this war.
Professor, what happens to the Strait of Hormuz? Who would control it? Is this still on the table? There's no clear way out today, but also once there is a negotiation, what happens to it in 3-4 months?
Well, that's what's interesting is that the Trump administration has talked less about control of the Strait of Hormuz in the last few days than they've talked about a nuclear concession. So it might be that the Trump administration would allow Iran to maintain some control over the Strait of Hormuz as long as Iran reopens trade. Because that's a real problem for the Trump administration. They can't open the Strait of Hormuz by sort of clicking their heels and saying open up, because really the Iranians control it, and they can control it with very simple weapons and cheap weapons. So it might be that this is the kind of thing where the Trump administration doesn't make a concession to Iran, but leaves it quiet, accepts a nuclear kind of deal, and Iran remains in control of the strait on the assumption that trade opens up.
Professor, how crucial is the next couple of weeks? I don't know whether there's someone that you would watch from the Trump administration side to look to whether there are any signs of progress.
Well, it would be actually watching the Iranian side, because they're the ones who are in control of this right now. The Trump administration, as I said, they want out. The president wants to get out of this. He just needs to be able to declare victory. So the Trump administration has been actually in some ways quite clear in the last week about what they want. What we don't know really is what the real condition is for the Iranian government. So I would watch what the Iranians do and see if there is any wiggle room on their side to see if this is going to end relatively soon or whether it's going to stretch on. If Iran doesn't want it to end, it's not going to end because they control the strait. So it doesn't matter what the US government wants as long as the Iranians want to keep this going.
Who has the best intelligence on Iran right now? How much do we understand about the strengths of this new regime?
That's a great question. I don't think American intelligence has been very good on Iran to this point. They really did seem to think that if they killed the government, that they would get a government in place that with which they could deal. They don't seem to even have now a great deal of knowledge about the internal condition of the Iranian government. My guess is the people who have a better idea about this are the Russians and the Chinese. Who are closer to the Iranian government and actually, from what we can tell, are increasing their support for the Iranian government. So they might have a better idea about the true condition of what's going on in Tehran. And it is notable that the Iranians have reached out recently and made a very public showing of support, received a public showing of support from Russia. Trade from China is up. So I think that actually is probably where a lot of the power in this lies.
Yeah. Should we worry, very quickly, Professor, should we worry about China potentially giving more support to Iran?
Well, I think that's what the Iranians want. I mean, the Chinese are probably going to do what they consider in their best interest. They certainly don't want the Iranian government to be overthrown by a pro-Western government. So we should worry about it. But actually, there's not a lot that we can do about it. But the United States has, it's gone to bombing. It's tried to destroy the Iranian government. And as of now, it's failed. So it can try and intimidate the Chinese. But by the way, the United States has lost its military levers over China. That the United States has shown it cannot fight a war in the Western Pacific, that it doesn't represent that kind of military threat to China that people perhaps thought it did represent.
Thank you so much for joining us. That was Phillips O'Brien, Professor of Strategic Studies at the University of St. Andrews. Coming up, President Trump says he plans to remove some tariffs on Scotch whiskey following the visit of King Charles. More on that next.
When I moved to New York City from India, the only dream which I had was to be a physician. But when I arrived here, I thought there was something missing. So that's when I started working on Wall Street, covering pharmaceutical stocks. I wanted to learn different skills to expand my impact in medicine. Then I moved to Silicon Valley and founded Unicisive. Finding my own path opened up opportunities to help people that I couldn't have imagined.
Peter Piper persistently missed packages, so he scheduled his deliveries with Amazon Business.
Peter Piper
and positively prospered. Amazon Business, your partner for smart business buying.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Oil prices head for a second week of gains, but President Trump defends his policy in the Middle East, saying the Iranian economy is a disaster. Apple topped estimates, a boost for incoming chief executive John Ternus, but the company warns about higher costs of memory chips and shortages of Mac computers. And Japan intervenes in the currency market for the first time in 2024. But some traders say more action could be needed. So President Christine Lagarde signaled the European Central Bank will consider a possible interest rate hike in June after policymakers debated and rejected the idea on Thursday. Well, Lagarde says the euro area is moving away from its baseline.
Directionally, I know where we're heading. Okay. But we shall see. There might be massive changes taking place. There's one element that is going to have a real impact, and that is the duration of the conflict.
That is, of course, the ECB President Christine Lagarde. Now, the Bank of England has voted 8-1 to keep rates unchanged, with the chief economist, Hugh Pill, the single dissenter, calling for a quarter-point hike. Now, the governor of the Bank of England says that was perfectly understandable and played down the differences in opinion. Now, Andrew Bailey also told us the central bank is concerned about the impact of inflation on consumers.
Well, inflation expectations have picked up now because they do tend to follow current, the shorter end, 1 year ahead inflation expectations tend to sort of follow what inflation is today. But look, we're also obviously sensitive to the fact that people's memories are important here. They remember the fact that we had high inflation here 4 years ago. So that's also has a part to play in this. And we do take it into consideration, obviously.
Governor, I mean, overall, markets largely see today as dovish, yet your own chief economist was pushing quite hard for a hike. So is it odd having a dissenter coming from the BOE's own office?
Well, I wouldn't particularly say it's dovish, but obviously that judgment has to be relative to what you thought, what people thought we were going to do. So I respect that point. And we have been somewhat pushing against, I was pushing against the curve, as you know, 5 or 6 weeks ago, probably now. Look, I think Hugh Pill's position is perfectly understandable. I didn't vote with him. I didn't agree with him on the end decision, but I understand the point he's making. I would also say, and Hugh wrote this in his paragraph, that he used the word modest, and I think he used the word modest very deliberately. I mean, he'll speak for himself, but I think that word is deliberately in there. So the differences between us are not that big.
What would it take for you to actually to vote for a hike next time?
Well, I think we sit down and go through all the evidence. And I think what it will take is, and we laid out sort of some of the things we'd be looking at is both quantitative and qualitative. I mean, I think what we get on the qualitative side is going to be important because we'll be talking to a lot of businesses saying, how are you approaching passing these cost increases through? What are you seeing in terms of demand for your, whatever you produce or provide? It's going to be some time before we get a real read on wage settlements because there's quite a seasonality to wage settlements in this country. And we've passed through peak season, which is earlier in the spring. So it's going to be a while before we get a really probably pretty big read on wage settlements. But we will be looking very carefully at what people are planning for, those supplements that are coming through. That will be important as well.
How big is the risk of a technical recession at this point?
Well, most of the scenarios we have actually, and against most of the interest rate paths, actually suggested this is a story of slower growth. In the more extreme sort of difficult scenario, with some policy rule, though you can have a variety of policy responses. There are some quarters of negative growth, but this is actually interestingly not, as we see it today, at least a story of dominating. It's going to be a recession. That's not the dominating story at all.
Governor, I mean, so far you're happy with the market reaction, and also, I mean, next week is a big deal in terms of the elections in parts of the UK. Could that be a market event?
I think the market's reaction so far today is very sensible. Look, on the UK side, I don't comment on UK politics, obviously, but what I would say is that the things that I think what we've seen in the interest rate curve has been dominated by the Gulf. The things I look for in terms of when I try to sort of break down what's influencing this, has the exchange rate moved? No, not much at all, actually. Have we seen much movement in short-run sterling swap spreads? No, not much at all. In fact, it's a bit tighter than it was before the budget last autumn. So that suggests it's really actually it's a Gulf story, I think.
Governor, I mean, the final question is the NISR warned this week that rates could go 150 basis points higher if the Middle East crisis worsened. I mean, can you see any scenario where that would happen?
Well, look, there are really bad scenarios in this thing. If we get cut off of energy supplies going on for a very long period of time, bad things can happen. But it's not in our in our central decision today at all.
But this is what, 10% chance? So
I know, because I think the world is so unpredictable at the moment. So we've seen it today, let alone over longer periods of time. The world is so unpredictable that I think putting sort of precise, percentage probabilities on things is put it politely, hazardous business.
Well, that was the governor of the Bank of England, Andrew Bailey, speaking to me yesterday after the press conference. Now, President Trump says he plans to remove some tariffs on whiskey following the visit of King Charles. Well, Trump says he would remove the restrictions so that Scotland and Kentucky can start dealing again. The U.S. bourbon industry exports used casks to Scotch producers. Now, for more, I'm joined by Bloomberg's James Wolcock. James, I mean, this was a visit that had to go well for King Charles, and it went very well. Did he charm the president?
Clearly, I mean, everyone has, in my inbox at least, been talking about a big golden bell that the king dug up from a 1940s warship called HMS Trump, which still has the Trump name on it, which is a British ship that he gave to the US president. Now, the deal is big news. It's roughly $1 billion of UK exports to the US. The UK is also the US's second largest export market for bourbon. So look, it's good money, but more importantly, the president is playing favourites. The UK Prime Minister has been frequently attacked in the past few months by it goes to show that UK has another asset, soft power, and you can send the royal family with pageantry and pomp and great speeches, and you can get something. It's US president.
Wait, do we have any idea of how long, I guess, this, friendship or likeness lasts? Because, and you're right, King Charles, I mean, he was funny. He was, he kind of weighed into politics very subtly, but some of those speeches that he made were very powerful.
Well, it's kind of also Charles who was responsible for the initial US-UK trade deal. If you remember, Keir Starmer Trump's love for the royals is very long and enduring. I think, to your point, the difficulty is his hostility towards Mr. Keir Starmer is also now quite well documented. I think next week there could be problems as we look to UK's plan to try and reopen the Strait of Hormuz internationally without helping the US. We're looking at the US president talking about withdrawing troops from NATO in parts of Europe. There are all sorts of issues on the horizon that I think the king will have very little ability to play into. And meanwhile, for the UK Prime Minister Keir Starmer, he's got very difficult local elections coming up as well.
Reading between the lines, there were points where the king did, almost seem to suggest, look, Mr. President, back off my Prime Minister. Is that fair?
I mean, he's also, by the way, as the head of the Commonwealth, the head of Canada as well. So there are also parts of that there too. I mean, Charles, before becoming king, has long had very big environmental credentials. He's been a very fan of green technology. And so it's the word we're using, it's punches with a velvet glove. So it's all sort of very hidden behind some charm and charisma. But I think the questions will always be, when will this trade deal happen? There are still questions about the details of these Scotch tariffs. There's a lot more behind the pomp, sort of the hard economics that we sort of still tracking and is yet to be seen.
And James, I mean, on these local elections, is it likely that they go badly for Labour, and how do they regroup and rethink?
I think you're being very kind, but likely. We had a poll this week, the landmark poll, that says of the sort of 2,500 seats Labour defending, they could lose 1,800 of them. That would be the worst loss in sort of the midterm elections of any UK government in modern history. I mean, so that's the definition of badly, frankly. That could spark all sorts of problems for Keir Starmer, because what happens is every MP has their councillors. If you lose your councillors, they ring you up and go, what are you doing? I've just lost my job, I've lost my salary, I've lost my sort of career. What are you going to do about that? And so that's when the MPs who back Starmer and keep his seat in Parliament start ringing him up and saying, what are we going to do?
James, thank you so much, as ever, for the terrific briefing. James Wolcock there with the very latest on the UK. Now, the yen retreating after its biggest gain in almost 2 years as investors assess the impact of Japan's market intervention. Our market reporter, Justina Lee, joins us now. Justina, it's so good to see you. How significant was this latest intervention, and are we likely to see, more than one round?
Yeah, we did see a pretty stark reaction earlier today in Japan, with the yen surging 3%, the most in almost 2 years. Now, it's probably worth remembering here that the BOJ really is fighting against the fundamental tide. Because on the one hand, we've had a hawkish hold from the Federal Reserve this week, which is supporting the dollar. And kind of on the other hand, I mean, the BOJ has seemed like reluctant to signal that another rate hike is coming. And so when all the fundamentals are kind of pointing to a weaker yen here, I think if we really want to see some sustained resistance to further yen depreciation, you probably do need more intervention here.
You see, can they do something on oil markets? Because that's also, I mean, this is a huge problem for a lot of Asian economies, especially Japan.
Yeah, exactly. And that would be a very novel way of dealing with currency weakness. But it does seem like Japan is considering that move right now. I mean, we've had kind of officials signaling that they think that speculative trading in crude oil is something that they're watching when it comes to the currency. And that's because Japan is very dependent on oil imports. And so when oil is higher, the currency naturally weakens. And it does seem like they are considering intervening in the oil derivatives market as well.
So this would, I mean, so this would be the markets. I mean, there's no cap or anything like that that they could do. I mean, that would be really dramatic. Are you hearing anything of, the more innovative ways of maybe trying to keep a handle on this?
Yeah, exactly. I mean, my colleagues in Japan have reported that the BOJ has spoken to market participants about the possibility of intervening in oil. And I think if we look at like the past patterns of intervention, it usually does take, quite a few rounds for that move to really stick. And some people are talking about how, whether the US is going to kind of take part as well. Of course, that will be a way stronger signal to the markets, but that is generally kind of extraordinary, very rare. And so I think people are really kind of watching how Japan is going to fight those fundamental tides here.
Justina, thank you so much. As ever, Justina Lee there with the very latest on the markets, especially on yen. Now, Wall Street's trading desk just capped off a record-breaking third quarter as clients scrambled to hedge against global volatility. Now, while UBS rode that same wave to buffer profits, the celebrations may be short-lived. Well, Paul Davies from Bloomberg Opinion argues these massive gains could actually complicate the bank's ongoing regulatory battles. And Paul joins us now. Paul, thank you for coming. I mean, I love you worked from like UBS yesterday, and then it was US with Jamie Dimon, Barclays, and UniCredit. So we can really go around the world and talk about all the banks. Look, I love your column on UBS because the general idea is that if you're negotiating with the government that want to, for you to put money to one side, you don't want to be that profitable, especially if shareholders expect a lot of money back.
Yeah, exactly. I mean, the problem this week is that, they did very, very well. And some of the, short-term or the smaller concessions that the government has given them on some of the capital rule changes that are coming have made it very apparent to a lot of the analysts that actually they could afford another big buyback in the second half of this year. They've already done or nearly completed about $3 billion worth of share buybacks so far. And lots of people are now expecting another 3 billion more. But this is going to be announced, if they announce it in July, right in the middle of when the Parliament is starting to debate whether they need to hit them with much bigger capital charges to protect taxpayers against the risk of a possible failure of what's now their last very large, globally important bank in Switzerland. So it's a bit awkward.
But it is a little bit awkward. When you look at some of the business models, does this set of earnings actually show you what works and what doesn't? Or is it also a bit of luck of the draw if you're just doing really well on the trading front, given all the volatility because of what's happening in the Middle East?
I mean, everyone's done well on trading this quarter. Unsurprisingly, there's been a lot of volatility in markets. The US banks did better in general, I think, and on average than the Europeans. Some of that is business mix. Some of that is because the US banks do a lot more in commodities than most of the Europeans do. Some of that is to do with just being much more in US markets, which are bigger and kind of there's more activity been going on. And on the investment banking side, they definitely did a lot better in the US. And again, that's to do with where the deal activity is happening to some degree, I think. But it was still very good in all. I mean, I guess the issue the thing I realized about European banks this week is a lot of them, in fact, all of the significant investment banks are actually kind of really capping their ambitions in investment banking and markets now. We sort of.
Why is that? Is that because of the US?
It's to do with their own individual strategies. I mean, they've been recovering and rebuilding their balance sheets for years, and some of us expected them to kind of start maybe gaining share again, especially in trading. But most of them have now some kind of informal or formal cap on just how much capital they want to put into banking. So at Barclays, it's got to be less than half the balance sheet. At UBS, it's a quarter. And most interestingly, this week, Deutsche Bank, their new CFO, Raja Akram, who's just joined from Morgan Stanley, he put their private bank and asset management businesses first in his presentation, which is like, a cosmetic shift in some ways, but it sends a signal. And they now want to build, they had a first quarter where the investment bank provided less than half of profits, and they want to build on that. And they want the rest of the bank to provide more of the earnings in the future.
But are we going to be in a situation where it's, the Goldman Sachs's, the JP Morgan's, Morgan Stanley's that will come more to Europe and actually try and get that market share in terms of investment bank. And is that not risky actually for European banks if they want to ever build it up again?
I mean, I think absolutely. And don't forget, they're being helped, or they're going to be increasingly helped by the following wind of a Trump White House that is very keen on deregulation. You know, there is some capital easing going through. I mean, JP Morgan, they still think it's going to hurt them more than help them, but then they always do. But so there is definitely going to be more expansion. And Goldman Sachs itself was very expansive with its balance sheet in trading in the first quarter of this year. And yes, you're right. Longer term, you know, this risks leaving European companies, you know, completely dependent on US banks for access to capital markets. And that's a lot of decisions make sense individually for the European banks, but collectively for Europe as a whole, maybe it's not such a good thing.
Yeah, it's never good news. Paul, thank you so much. Paul Davies there from Bloomberg Opinion. Now, coming up, we'll also talk to Tim Richards, the founder and chief executive of View Entertainment, about the impact of Paramount's Warner deal on the cinema industry. But let's face it, we'll also talk about Devil Wears Prada too. We'll talk about cinema next. So this is Bloomberg.
When I moved to New York City from India, the only dream which I had was to be a physician. But when I arrived here, I thought there was something missing. So that's when I started working on Wall Street, covering pharmaceutical stocks. I wanted to learn different skills to expand my impact in medicine. Then I moved to Silicon Valley and founded Unicisive. Finding my own path opened up opportunities to help people that I couldn't have imagined.
Peter Piper's pepper picking proved painful. So he ordered the supplies he needed from Amazon Business. And positively proud of it. Amazon Business, your partner for smart business buying.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, the $111 billion Paramount Skydance merger with Warner Brothers Discovery could reshape the cinema industry. While David Ellison, the Paramount chief executive, has pledged 30 theatrical releases per year, industry groups remain skeptical. Now, they point to the 2019 Disney-Fox merger, where consolidation ultimately led to fewer films and less variety for theaters. Well, joining us now is Tim Richards, founder and chief executive of View, the largest privately held cinema operator in Europe. Tim, thank you so much for joining us. I mean, first of all, when you look at all of this M&A background, does the cinema business just remain too fragmented in Europe or globally?
Well, I mean, the good news is business is back, and the demand, our customers never left us, but business is back right now. And if you look at what happened with Michael opening weekend, $217 million, Devil Wears Prada is going to be very, very similar. In terms of how for consolidation, it is fragmented, and it has been fragmented for quite a while. And I think everyone's been waiting for business to return before they actually took that first step. The contrarian investors are too late. We're back.
But Tim, I mean, you need content first and foremost. So we'll talk about ticket pricing and, you know, AI and how you manage queues and stuff. But you need content. Do you worry there's going to be less content out there, less films being made because of the merger?
Yeah, look, I think my biggest concern is demand. And I think we've proven certainly in the last few years that there is a massive demand for all movies of all genres, for all demographics. We've broken records for all kinds of movies. And if you look at Hamnet, Hamnet's going to do 20 million pounds in the UK. So I worry about demand. Where the demand is normally a supply will follow. If you look at what's happened, and I'm fresh back from Las Vegas and CinemaCon, and from meeting with studios in Los Angeles after that, and the commitment to feature filmmaking right now with the legacy studios is unprecedented. Then when you actually look at the three biggest names in tech, Tim Cook, Jeff Bezos, and David and Larry Ellison, they've all now embraced theatrical releases and film production. They're coming into our industry.
At CinemaCon, I mean, ticket prices and premium formats, I know was a lot of the talk. Sony executive Tom Rothman was saying, like, movie tickets are just too expensive. Is he right?
I would agree in domestically in the US. I think that there's a lack of creativity in pricing and we about 10 years ago brought on pricing experts. And I think if you look at what's going on in Europe, particularly in the UK, it's a completely different pricing model. The industry was in the dark ages forever, and we've kind of brought it forward with dynamic pricing models. And we have entry level prices for our customers who are perhaps suffering financially a little bit. We want to make it accessible for everyone. And it's a big difference. I mean, as you probably have seen, it hit $50 in the US. And, you know, for most families, that's simply not achievable, not attainable.
Are you expecting tastes of cinema goers to change a little bit? I mean, there's will you see more European productions being shown in movie theaters, Japanese anime, Indian films?
In Europe, absolutely. I mean, we have the luxury here of having kind of domestic filmmakers. And in our markets in Europe, every single year, a handful of movies break into the top 5 or top 10. So we have a much broader audience and taste in Europe than domestically in the US, where it's predominantly 85 to 95% Hollywood. And if you look at what happened in Italy this year, Buen Camino, Cecco Zaloni's new movie, it passed Ancora Domani, the last biggest movie in Italy, and then it passed Avatar, the highest grossing movie in Italian history. And what that actually does for European filmmaking, it's one of those classic success breeds success. It has shown other filmmakers and financiers of film that there is a market out there, and it's a great market, especially an emerging market now.
What have you seen as biggest change actually in your world in the last 10 to 15 years? I mean, if you go back to the Devil Wears Prada, I mean, I couldn't open anything on social media without being bombarded actually with, you see this with publicity and tours. Is that what makes the movie successful?
Well, when you consider that Devil Wears Prada, the first one, was 20 years ago this October, it's extraordinary, and there's been a huge demand. There's a demand for great stories. And I think really the success of movies generally starting with a great story. And Devil Wears Prada is a great story, and that has been well executed with great talent. But, you know, 2019 was the third consecutive record-breaking box office year. This was not an industry that was broken. We got hit by a pandemic. We got body slammed by a pandemic, and now we're back.
Talk to me a little bit about whether there's, enough demand for alternative content like concerts or sports.
Well, we did the very first kind of live concert with Genesis in 2007. And there is absolutely a demand. And we worked with Bernie Ecclestone, and when he was running F1, we ran F1 races right through. We've done Wimbledon. We did Wimbledon 3D, and we learned about camera placement because a lot of our audience got sick because the cameras were too close to the net, back and forth. But there is a growing demand now, and certainly for Asian films, Bollywood. Bollywood produces 20 times more movies than Hollywood does. There's a huge demand, and you're going to see some very, very big international successes with Bollywood movies for this year.
Okay, what's your favorite film that you have heard of that everyone should go and see at the moment? You have one on the spot, or not?
I see so many movies. It is, I think looking forward, there's going to be some really interesting movies coming up that I'm really looking forward to. There's a reboot of franchises and even with Billie Eilish's concert movie coming out as well, James Cameron.
Tim, I mean, do you feel like you're a competitor to Netflix? I know it's a different experience, but again, because the content is king and it's everything.
Yeah, I started my career in home entertainment with the studios, so I've kind of seen all sides of it, and I've never looked at what happens in home as being competition with out of home. I worry more about theme parks and sporting fixtures than I do what happens in home.
So fun. Tim, thank you so much for joining us. Tim Richards, our founder and chief executive of View. Now, a couple of things we need to watch out for because it is a very big market today, and we've had a pretty big week, not only when it comes to central banks, but of course, everything that's happening in the Strait of Hormuz. So quickly, U.S. equity futures pretty much steady. Maybe there's a bit of a pause in the rally that's put, Wall Street gauges to record highs. The other thing I'm looking for is yen resuming gains triggered by Japan's intervention, and then oil holding its second weekly gain as Donald Trump says he was sticking with a naval blockade of Iranian ports. Up next, it's Bloomberg Brief, and this is Bloomberg. Have a great weekend, everyone.
I'm begging you, stop asking, does that make sense? Does that make sense? Sorry, can I just add one thing? Is it okay?
Hey traders, happy Thursday. What do you know? Another new all-time high in the markets, SPX and NDX. Now this video is going to look a little bit different than I thought it was going to 3 hours ago. So 3 hours ago when I